What's up guys? So the monthly report for Windsor for July is finally out. Let's take a look at the data and see what's going on in the market right now. Starting with the average price trend for July 2024, we can see that it's up about 8.15% compared to the same time last year. Compared to June's average price of 571,000, there has been a noticeable increase, with July's average hitting about 599. However, the number of transactions didn't show much change from the previous month, remaining completely flat. Some of you might be wondering why did the prices rise so dramatically while the sales are still the same. By breaking down the data a bit, we can see from this report, which we got from the real estate board, that among the top 5 most popular home types, only the top selling type, bungalows, saw a price drop in July. The second and the third most popular types, 2-story and ranch homes, actually experienced noticeable price increases. This explains why, despite the same number of sales, the average price went up. More expensive homes were being sold. Looking at July's total transaction volume, the chart shows that July's total sales volume was slightly higher than June's. This means that even with the same number of transactions, more money flowed into the market, which also explains the rise in average prices. So what does this data tell us? Number of buyers in the market hasn't really increased. Transaction volumes are basically the same, but there has been an increase in the number of buyers purchasing more expensive homes, like 2-story and ranch homes, which are typically above the average price. These homes usually attract buyers looking to upgrade, so the recent price hike in July is entirely due to a sudden surge in the higher end buyers entering the market. Just last week, the US released its latest non-farm payroll numbers, showing a huge 36% month-over-month drop, and also a 38% year-over-year decline, far below expectations. The US unemployment rate is also continuing to increase, now hitting 4.3%. According to Sam Rule, this suggests that the US economy is unlikely to have a soft landing and is more likely to enter a recessionary cycle. This Sam Rule, developed by the Federal Reserve economist Claudia Sam, has had a 100% success rate in predicting past financial crises, though it hasn't been around long enough to be the sole indicator of an impending recession. Currently, market predictions suggest that the Fed is not just considering whether to cut rates in September, but whether to do so by 50 base points instead of the usual 25, paving the way for the continued rate cuts by the Bank of Canada. This chart here shows the relationship between the month of inventory in Windsor and the average home price trend. Typically, these two are inversely related, as you can see, but since the April this year, they have been moving in the same trend. Considering the earlier point about rising prices for high-end properties, we can infer that some wealthy buyers believe the start of a rate-cutting cycle will stabilize the housing market. They see this as a good time to enter the market. Looking back at global economic trends, we all know that in roughly every 10 years, there's usually an economic crisis. However, real estate usually doesn't crash because of this financial crisis. But the pandemic-driven price surge in Canada's housing market has made it difficult for many young people to buy a home, something that wasn't anticipated at the start of the pandemic. As a result, many, especially the younger generation, are hoping for a large-scale financial crisis to reset housing prices. They believe the housing market correction isn't over yet, so we will have to wait and see if their hopes come true and which direction the economy will take next.